Today's class is being sponsored by USG, the leading Forex provider in Australia. They are one of the few regulated providers offering trading and of commodities and indices and Forex with a real trusted Australian broker that is licensed to perform these functions in Australia. When you trade USG as your broker, you know you're dealing with a regulated broker approved by the Australian Securities and Investment Commission. That means all your funds are segregated in the Commonwealth Bank of Australia, so whatever funds you deposit are safe and secure. All withdrawals are processed within 24 to 48 hours. You have some of the fastest trade execution in the markets, up to 12 times faster than normal execution speed and very low latency. You have negative balance protection, and you also get a dedicated account manager. Now today, USG is sponsoring our webinar, and today we're going to be talking about the effects of the Korean mess, as best I can call it, on the financial markets. Now, when you do trade with USG, you get up to 500 to 1 leverage. You have very low spreads. You can trade 60 currencies, indices, and commodities. And you have a minimum deposit of $100. You also get all types of tools and support material. You get Trading Central, Zulu Trade, MyFX Book. All of these are yours free of charge when trading with USG. Now, they are an award-winning broker, being named the best broker in Australia in 2015, 16, and all of Asia in 2016, and probably in 2017, or we're hoping. Now, today's class is being recorded. To see this recording, just simply click on the same link you used for the class in about 24 hours after the class, and you'll be able to watch a recorded version of this class. Now, today we're going to be talking about the effects of geopolitical stress on the financial markets and with direct effects of the Korean crisis. Now, stocks are often shocked into quick decline when a major geopolitical event occurs, but the ability to recover has been very different. With the backdrop of rising tensions between North Korea and the U.S., Strategist Research did a complete study of short, intermediate, and long-term impacts in the S&P of a variety of key events going all the way back to World War II to see what has happened to the markets with the initial shock, how long it took them to bounce back, so that you can project what we could affect or what this would affect. Now, of course, we all know one of the biggest events that affected the world was the bombing of Pearl Harbor. Now, that resulted only in a 3.8% drop of the S&P 500. But within 20 days, the S&P was up 0.3%. And after 250 days, it had risen 3.7%. Can you imagine that? The S&P was rising during the U.S. entry into World War II. Why? All of that government spending, military spending was good for U.S. corporations. Then, of course, we had 9/11. Now, this was the worst reaction of all to 9/11, which triggered a 4.9% decline in the S&P on the first day. But after 20 days, the market recovered and was up 4.9%. But after 250 days, it was down 14.3%. So the initial effects of 9/11 were initial drop, market recovered, and then a longer-term decline, because 9/11 affected the entire world and the way the world was going to function into the future, which meant a huge amount of government spending for security. It didn't really move over into military, which didn't really move to profits for U.S. corporations. But then if we take a look at other major events like Lehman Brothers sparked a 4.7% decline in the S&P on September 15, 2008. And what did that kick off? The financial crisis, which has lasted till today. We're just slowly eking out of it. The S&P was down 15.9% in 20 days and 12.3% lower after 250 days. So in other words, Lehman Brothers had a bigger long-term effect Then 9/11. Then we had when Iraq invaded Kuwait. So when Iraq invaded Kuwait 27 years ago, the S&P only fell 1.1% and was down 9.3% over the next 20 days and 10% over the next 250. But why? Well, that had a direct effect on the price of oil, which then has a direct effect on the profitability and the cost at the pump to U.S. drivers, which rolls over to lower retail spending, which rolls over to lower manufacturing, which rolls over to lower profitability in stocks. And it had a worldwide effect. But if we look at it and think about it, look at this one. President Nixon resigned from being president of the U.S. It was 43 years ago. It had virtually no market effect, a 0.9% sell-off. But the S&P fell 13.8% in 20 days after, but recovered 6.7% in 250 days. In other words, Nixon had very little effect at all on the markets, except for some volatility in between. Now, we are looking at U.S. stocks being near a record high. Strategists say a pullback is due, and a pullback is due regardless of the North Korean situation. Stocks are trading way too high in the U.S. The dollar is way too low, while interest rates are eking up. Now, the North Korean situation does not appear to be triggering a major sell-off. Now, it has had its ups and downs, but however, if the situation becomes more than a war of words, or if North Korea becomes more successful with its missile launches, that could change the situation. And as we know, just a few days ago, North Korea got a little bit too aggressive. They fired the missile over Japan. Okay. And this is starting to have a little bit of worrisome effect or market risk-off moves to the overall market. Now we can look at here. These are all the major events compiled over the last 50 years and its effect on the stock markets. Okay. Some of them had big effects. When Germany invaded Australia, but that was in 1940. Okay, so we know that was World War II. 63, when Kennedy was assassinated, stock markets soared over the next few months. Okay. Oil embargo of 73. Now that had a big effect. We had a drop of 35.4%. So oil has had one of the biggest effects on the U.S. market. Then we had the bombing in Yemen of the USS Cole, the warship. We had a long-term drop of 17%. Okay. But the Iraqi war, we saw a climb of 28%. Bears and Stern collapse. That was the biggest effect on the markets. The markets fell 41.7%. Lehman Brothers collapsed 12.9%. And the surprising thing is Brexit, the U.S. markets, saw the U.S. markets up 20%. So what's it tell us? It tells us a little bit that events, significant historical events that affect the financial markets or the financial institutions have a bigger effect than geopolitical turmoil. So right now we are looking at this Korean conflict. Will it spark war? I don't know. We have Donald Trump that is on the edge of his seat. They're pushing him back into a corner. I don't know what the outcome will be, but we need to look at some history. We need to understand what got us to this point and how many times we've been at this point in the past. So North Korea has been provoking South Korea since the Korean Armistice Agreement in 1953. So when we signed that when I was a little baby, I was 2 years old. As recently as the 2000s, North Korea conducted several serious military actions, such as the Yellow Sea battle attacks on the ship and the islands, and various missile launches, which can be construed as great threats to South Korea. But they were limited to only threats to South Korea. Okay, today, we have threats against Japan, threats against Guam, threats against the U.S., direct assaults and direct verbal threats against the U.S. Now, North Korea started conducting nuclear tests in 2006. So this isn't something that just popped up yesterday. This has been going on, nuclear tests, for 11 years. And personally, I think we should have stopped these a long time ago, okay, which have been heavily criticized the world over and has intensified political and geographical uncertainty in the Korean Peninsula. North Korea's ambition to be a nuclear state has not just only raised concerns about potential war between the two Koreas, but has put world peace at peril. And to be honest with you, there's not much anybody can do about it. As the New York Times noted in 2013, there are various views on North Korea's nuclear tests. Many analysts believe that North Korea is again seeking aid and other concessions, while some suggest that it merely wants to be recognized as a nuclear state, like Pakistan. Still, others suggest that the North generally fears an attack by the U.S. or South Korea. I don't know why. But we find that the market's attention to very early nuclear tests was negatively related to South Korea's stock market. This negative effect on the stock market of the attention paid to the nuclear tests attenuated thereafter. Now, granted, whenever you're the direct next door neighbor of somebody that's having a geopolitical problem, it's going to have a short-term effect on the stock market. So nobody knows what's going to really happen. Uncertainty is what we're worried about. Interesting, only the attention paid to the second nuclear test was significantly associated with depreciation of the Korean won. Further, we investigated the responses of industry-specific stocks prices to nuclear risk. Our results show that only the banking industry was considerably hit by the nuclear risk in terms of industry stock price. The stock price of other industries did not respond significantly. Now that's funny, isn't it? Now that's something you have to keep in mind. Only the financial stocks were hit. The rest of them were left unabated. So a war on the North Korean Peninsula is the single biggest political threat, and one that would move markets, as Tina Fordham, Managing Director and Chief Global Political Analyst at Citi. Now, we know last week, or the end of last week, we had this new test, and we've had tests going back and forth. We had actually a lot of stuff out of the news last week because we were more focused on the hurricanes in the U.S. Trump was off on his track, but this weekend yesterday, Trump made direct tweets against what did he refer to him as? It was a very derogatory comment to the North Korean leader. I forget what he said in this tweet. But the markets seem to be uninterested in continuing the continued North Korean saber rattling. The market, traders get bored. They move on. Once headlines are there for a couple of days, they're ready for new headlines. They're bored with the old headline. You know how it is. The minute you see, the hurricane hitting Florida, and while it's happening, you watch it. But now every day, all the headlines are talking about Hurricane Irma. Who wants to read anymore? We want something new and juicy. And that's how traders are. You stop reading those headlines. You push them to the back of your mind. So the markets can move fast pretty easily, or move past things pretty easily. We can see in the chart on the right, even though the markets are trading slightly in the red, they're not in any major response. Now, North Korea's latest missile launch, which was less than 2 weeks after its suspected hydrogen bomb test, saw a projectile fired from an airfield near the North Korean capital, flying about 2,300 miles before eventually landing in the sea beyond Japan. Well, that's a little bit worrisome, because now they're not just threatening North Korea. They're not threatening Guam, but they're firing missiles over Japan. Well, that sounds like, okay, it's just over Japan. Well, what would have happened if the missile misfired or lost trajectory and ended up in Japan? Even though it might not have had a nuclear head on it, we would have been dumped into a full-scale, top-level, military movement. The reaction has been distinctly muted, though, in the markets. Japan's benchmark, the Nikkei, actually ended the day with only a 0.5% loss. Hong Kong's Hang Seng barely moved. Okay? barely went anywhere. So investors appear to be treating Kim Jong-un as the boy who cried wolf. The problem is this boy who cried wolf is all about his ego and could do something very bad. Now, investors also shifted from stocks to safe haven assets such as the Japanese yen and gold only a week ago. Ever since a week ago, they've been moving back and paying no attention. We're going to take a look at charts in a minute. They are understandably worried after President Donald Trump sparked a war of words with North Korea, threatening each other with the use of nuclear weapons. President Trump said on Tuesday that any threats to the U.S. would be met with fire and fury. This prompted North Korea to respond by saying it is considering plans for a missile strike on the U.S. Pacific territory of Guam. Now, even though the markets aren't overreacting and haven't moved off into risk-off mode, what we did see is a major warning from Japanese brokers issued a warning to their clients on possible geopolitical tension, saying that it could upset the markets at any time, advising them to maybe be in some kind of, not necessarily safe mode, but be out of those that could be rocked by a quick headline. Now, the increase in global risk has led to some choppy markets, and this has in turn affected gold prices as well. Global tensions also put doubts in the minds of investors who pull funds from the stock market to put in safer assets such as gold, which is considered a solid investment, especially in times of stress. Okay. This is why we have been seeing gold moving higher and the stock market moving lower whenever North Korea raises its head. So here we can look at a chart, and this chart I got from Bloomberg, on where the Asian markets are trading and how their response has been, okay, to North Korea. Now, in the beginning of 2017, stock markets were hot. They soared all the way up here in late July. They've leveled down, but they're still way ahead of where they started out the year. And if we look, they're in a nice steady uptrend, showing no long-term effects, but a daily effect or a weekly volatility to North Korea. The South Korean markets, on the other hand, the Kospi 2000 Volatility Index is a measure to price swings for some of the largest stocks in South Korea. Jumped 11% to 14.78, the biggest gain since August 11th, when markets were roiled by North Korea's threat to fire missiles near the U.S. island of Guam. So we can see, look at what happened. We see it turn all the way up here. And then what's happened over the last end of August? It tumbled down, and as we move into September, it's still pretty level where it was back in July. The markets seem to be abating and ignoring most of the talk between these two leaders. Okay. Now, we have the Japanese yen here, which is also considered a safe haven. And usually the Japanese yen rallies against the dollar as gold rises when people are moving out of stocks. So we can see that we've seen a slight rally in the Japanese yen and a slight rally in gold. Actually, we take it back. The Japanese yen against the US dollar has fallen. It's trading about 110, but that is more because the US dollar is so weak, while gold has been slightly climbing. So we have spot gold here, and we have the spot yen. So less risky assets are benefiting from the geopolitical tensions, as they have in the past. Gold rose as much as 1% trading in the highest level since September 2016, while the yen also climbed as much as 0.9%. But again, we're seeing the yen climb because the dollar is way down. We might see a reverse of that. We see the Federal Reserve meeting today and tomorrow, I believe. So we might see a reverse of that depending on what the Feds do in their meeting this week. Now, U.S. Defense Secretary Jim Mattis has issued a stark warning to North Korea, telling it will most likely end its regime and destruction of its people. President Trump boasted overnight in his tweet, "My first order as president was to renovate and modernize our nuclear arms arsenal. It is now far stronger and more powerful than ever. While North Korean tensions could fade, the market remains vulnerable to other surprises. Now, gold prices are up about 1% so far as the metal pushes so closer to 1330. That's a very strong rise, especially when gold was predicted to be trading 1100 or down at the $1,000 range. There is increasing expectations for Trump to counter-react the North Korean attention. Others don't see a decline in gold prices anytime soon. So we can see that the prices of SPR gold shares, which is the largest ETF for gold, has been steadily climbing upward. It hasn't been skyrocketing, but it's been steadily climbing since July. So we're not having a panic in the markets, but we are seeing more and more people slowly moving into gold. These are people that are less into speculating and more into investing and just want to protect their portfolios. North Korea had received a bit less attention over the last couple of weeks, but that's over. It's time to stomp one's feet, force yourself back into the spotlight. North Korea launched a ballistic missile that flew over the Japanese territory before finally landing in the sea. Perhaps some do not realize just how close to an act of war this actually was. Asian markets seem to have taken it in stride. European and U.S. equity indexes and safe haven assets are very clearly being impacted in a most significant way. When you think about it, of course, Kim Jong-un would choose a time like this to try to draw global attention. The United States and the American president are also focused on the natural disaster in Houston and Florida. The U.S. 7th Fleet has just gone through an unplanned change of command after embarrassing fatal accidents that were caused by unforeseen navigational problems. The news report that I have seen do not mention that anything defensive was fired at this missile, which I find incredible. That's what I don't understand, is why we just didn't blow it out of the sky. If the U.S. troops or the South Korean troops that were in the sea there just fired at this and knocked that missile down, or even missed it but took aggressive action, might have said, okay, that could have been a key warning, but the fact that we sat back and did nothing is very worrisome. Could we not have been prepared? Could we not have seen the missile launch? Could we not have the ability to knock it down? You would think that either the Japanese military or the U.S. allies would have at least responded. If Kim Jong-un wanted to prove that he could easily strike Japan or even South Korea, he now knows that he could easily do so. The only deterrent at this point is the concept of mutually assured destruction. The fact that the North Korean regime would have a 0% of surviving its own offensive actions. One must be first rational to understand this. So now I am slow to move on a morning where one would be paying a premium for gold while selling equities at a discount. Major domestic macro events such as PCE pricing information and the monthly employment numbers loom later this week. So the markets may be sitting tight. We have a lot of events on the calendar and the Federal Reserve meeting. On top of that, we still do not know what the president's response to what North Korea has done. That uncertainty is likely adding to the round-off mood, the risk-off mood permeating the morning's financial markets. If traders do not feel compelled to lighten up the net longs today, be cognizant of current valuations. Now, traders are not running out of the market. The market eased down a little bit. It didn't show any succinct reaction. While dollar values plummeted against both the euro and the yen, there would be a sustained value in large multinational corporations. So this risk-averse sentiment is expected to carry out to international equities. Now, if the markets move to risk-off sentiment, sentiment is different than action. If you're uneasy but you're not selling, if you're uneasy but you're not moving, you're still in a risk-off, means you're not buying. Okay. Though analysts do not expect more than a marginal decline for the week, North Korea early on Sunday conducted its sixth and most powerful nuclear test. That was a week ago Sunday, using the advanced hydrogen bomb. The detonation, or this was 2 weeks ago, the detonation is the latest escalation in tensions between North Korea and South Korea. And that was where we stayed until we had this weekend's launch. Analysts said that one key factor that will impact investor sentiment will be the U.S. and the UN's response to North Korea. Now, today we have Donald Trump's speech at the UN. We want to watch this very closely. In a series of tweets several hours after the test, President Donald Trump described North Korea as a rogue nation and a great threat. And we think a lot of his speech today is going to be directed at China and North Korea. North Korea has conducted a major nuclear test. Their words and their actions continue to be very hostile and dangerous to the United States. North Korea is a rogue nation which has become a great threat and embarrassment to China, which it's trying to help but with little success. Because remember, North Korea is an ally and a satellite of China, and they don't seem to be able to rein in the North Korean government, which is causing a very big amount of stress between the U.S. and the Chinese. Now, on the sidelines of the UN, President Trump yesterday, I believe it was, spoke with President, I'm not know if I'm saying it right, Xi of China. We don't know what it was about. It was not a schedule, it was a scheduled meeting, but it was on the sidelines of the U.S. There is no telling what will happen next in the ongoing tussle between the U.S. and North Korea. If the crisis in the North Korean peninsula continues, we might see institutional gold prices inching highward towards the 1360 mark. This also means that prices could crash if fears of a military strike recede. The geopolitical risk is already in the price. Gold prices see an immediate correction if the Korean Peninsula strike crisis ends. So if you're going to trade gold, be prepared for something to be handled. If we have some type of resolution, okay, this doesn't mean that North Korea just shuts up for a while. If we have some type of a arbitrage or arbitrated or agreed upon reduction of this nuclear mess, we could see gold tumble way below the 1280, 1290 levels. So remember that gold is also rallying because of the slippage of the US dollar. Gold has climbed steadily, okay, or advanced steadily in dollars because the dollar's fallen to 91, which is extremely low. This will have an effect if the Feds take some type of aggressive or positive action in tomorrow's decision, or Yellen makes a very hawkish prediction moving into 2018. So other factors like the weakening dollar, the Federal Reserve not increasing interest rates, and concerns about the Trump regime are also propping up gold prices. We expect gold prices to remain range-bound with an upward bias in the coming months. Since international gold is dollar-denominated, the two share an inverse relationship. The dollar has slipped against major currencies, and experts don't see any let-up on that front. Only a rate hike by the Federal Reserve can strengthen the dollar. But it keeps getting postponed. The conflicting economic signals of the Trump administration is another factor holding the dollar back. Now, investment demand for gold also needs to pick up to rally. The World Gold Council data shows that gold demand slumped 14% to an 8-year low of 2,003 tons in the first half of 2017. But gold purchases will always slump when the stock market is trading at an all-time high, because where are you going to go? You're going to go where the profit is. When stocks are making record highs, people aren't buying gold and people aren't investing in gold. Even governments aren't buying gold. So much depends on whether you're an investor or a hedger. Given that gold price is not expected to move up significantly from current levels, investors should wait for a correction and get in only after a meaningful dip. However, the situation is different for hedgers who want to keep a part of their portfolio in gold as a protection against unknown events. In addition to geopolitical risk, the relatively high valuation of equities is attracting investors to gold now. Because as we started this conversation, we said the global stock market are due for a correction anyway. The stocks are trading way too high. Since the equity valuation is placed above the long-term average, investors should maintain or increase their gold holdings. Now, gold is highly sensitive to rising U.S. interest rates. which increase the opportunity cost of holding the non-yielding asset while boosting the dollar in which the metal is priced. Investors largely brushed aside concerns of geopolitical front after a relatively quiet weekend in the Korean Peninsula. U.S. Ambassador to the UN, Nikki Haley, said on Sunday, the UN Security Council has run out of options containing North Korea's nuclear program, and the U.S. may have to turn the matter over to the Pentagon. That's scary. North Korea issues will likely take center stage when Trump addresses world leaders at the UN for the first time today. So that's due to happen in a very few hours. Now, North Korea World War III fears fade, pushing metals down. Okay, so remember this. It's an ever-developing situation, but the global investors seem to be pushing it up. So don't let headlines make you run out of the markets. Remember, unless something new really develops, it's a war of words at the moment that investors are getting tired of. But watch for a correction in the stock markets. Watch for the Federal Reserve decision tomorrow to see where gold's going to go, where dollar's going to go. And the dollar will also be in all of its cross currencies. If we have a Federal Reserve rate increase, we have a mention of no policy normalization, we could see it push the dollar back up. And that would affect gold, and it will also affect the stock market. We have a rate increase, would affect the stock market values, and would push its cross currencies down. So we have a lot of things on the counter. We have some big economic events that are coming out of Europe this week. So we also want to watch the economics calendar, and we want to keep an ear out for Mr. Draghi as we're getting ready to hear something from him. So give USGFX a try. Go to their website at www.usgfx and set up a demo account. You'd be amazed at how nice trading is there, how many tools you're offered, and how successful you can be when you have the proper education, the proper foundation, the proper tools to make smart trading. So thank you very much for joining us today. Have a great week, and thank you for being part of the Investing.com family, as well as supporting USGFX. And remember, this webinar has been recorded. You can see a recorded version in about 24 hours by using the same link used for today's class. Have a great night, have a great day, depending on where in the world you are, and we'll talk to you again real soon. Bye now.